Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday. It's May 19th. This will be our chart lesson for today. And real quickly before we get started on our chart lesson, just a reminder, I will be out Thursday for my surgery. I believe Wednesday will be a normal day for me, and I don't know about Friday. Will I feel like coming in Friday? I just don't know. I have to wait and see. So, but definitely will not be coming in. No mid-morning chart on Thursday and no chart lesson on Thursday either. I normally don't do a chart lesson on Friday anyway, so the key will be, do I feel good enough to come in and do the mid-morning stuff, or maybe even feel like trading for a little bit myself Friday morning. It just depends. So we'll just have to, if you see me Friday morning, you'll see me, and if you don't, you'll know why. So, but yeah, I'll be out Thursday for sure, and probably most likely Friday morning as well. I usually leave by lunchtime on Fridays lately anyway. I try to get out of here at noon on Fridays and try not to look at this stuff again until Monday. I have to have a break sometimes, and I've just pretty much decided lately that I'm leaving at noon on Friday, and anything that I haven't, any emails or anything I haven't addressed, I'm not going to address them till Monday. So it's gotten to be too much for me to try to do this all during the weekend, and um, I still love everything about trading. I still love the teaching, but I don't want to burn myself out at the same time. So I'll do what I can during the week, and on the weekends, I'm just have to step away from it for a while. So that was part of the reason I got into this, was to give myself a better lifestyle. And I feel like lately I've tied myself down with the teaching part of it. So I'm not trying to back off of my teaching, but at the same time I'm trying to give myself more, a little more free time as well, because that was the main reason I got into this. So anyway, let's get to the chart lesson. Again, I won't be here Thursday, and we'll just have to see about Friday. So we're getting to the daily chart. You can see we're still, looks like we got back inside this range. We came back and tested the support, bounced it off the trend line as well. So this trend line's still in play. My guess is we're headed to test these next couple of possible targets. This market's on a tear. We're almost back to, we're not far off the all-time highs up here again. So, everybody was ready to throw in the towel, and the market was done, and it was going to crash, and this and that. Just don't listen to that stuff. Just follow the chart. It'll show you what it's going to do. It'll take you where it's going to take you, and that's all that matters. So don't listen to the news. We've talked about that many times. If you're new here, don't listen to the talking heads, and don't listen to the experts. All that matters is what this chart's showing you, what this chart tells you. Anything else is just total BS, so just stay away from it. But anyway, we're still in an uptrend. We had another up day. We traded lower, reversed, turned, closed on the high. Or I wouldn't say we closed on the high. We closed almost on the high. It is 4:15 now, so the market's closed, and you can see we didn't close far off the high either. So we are still headed higher at this point. That could change tomorrow. Who knows? But as of today, we're still headed higher. And so, as long as really this is just to give us a longer term look. My guess is we're headed towards one of these other targets. Whether or not we'll make it, that's to be seen, but that's what we're looking at. And the only thing we really care about is what's on the 2,000 tick chart. Somebody sent me an email today, said, I'm getting confused. I look at the 10,000 tick chart, and it's showing this, and I flip back over to 2,000, it's showing something different. I'm getting all confused. Don't confuse yourself. Don't look at a 10,000 tick chart. All you need, let's go ahead and flip over to the 2,000 tick chart, and then I'll pick this back up. Okay, here's our 2,000 tick chart. Everything you need to trade is in this chart here. Now, there's no need to open up any 10,000 tick chart or any 1,000 tick chart or 500 tick chart or 20,000 tick chart. We do look at the daily chart to kind of get a picture of the longer term, but when we're trading during the day, we're not going back and forth between that and the daily chart. This is the only chart we look at. Everything you need is here. You just have to learn to see it. And if you're flipping back and forth between two charts that are conflicting, you're just going to confuse yourself, and you're going to miss easy, good trades most likely. Just don't do it. It's all right here. There's a reason I used to have banks of screens and trying to look at this and that, and it's all a waste of time. All you got to do is learn to see what's in this chart, this 2,000 tick chart, and it's all you need. And it's much simpler, and you'll have much more success. But you've got to wean yourself off all those crutches, the indicators, the anything, the software, the uh, certain patterns. I mean, yeah, we use certain patterns to enter here, but the patterns by themselves mean nothing. It's what the chart's telling you. The pattern, all we use these patterns for is to time our entry point and our price point. Otherwise, we're basing it off the chart. Find the key entry points and wait for prices to get to the key entry points and give you a setup. That's all we're doing. And so when you ask me why this pattern looks just like this pattern, but this pattern was a good one and this wasn't, it's because the chart was totally different. You'll see the same pattern over and over and over. You'll see second entries all over this chart. Doesn't mean they're good ones to take. You have to understand what prices are doing, where they're headed, and try to go with them. And usually they correct back to the key entry point. Here we had a spike. We had two channels really working up, but we also had a spiking channel. And you can see you didn't know which one of these channels was it going to be the spiking channel that won out, or was it going to be the two-tiered channel? Well, you don't know till you get there. And you can see we were bouncing across something all the way across here. That tells you there's something there. So draw that trend channel and stay with it. And you can see once we got back to the main trend channel, it came back in play. So it's the key pattern. This was just a spiking channel within the bigger two-tiered channel. So that's how you know. You just have to follow the price action and let it show you. And the problem, you can learn this strategy maybe in a few months, but the problem is you will not have the experience. This is a skill set, and it takes a long time of doing this every day to get really good at it, because you have to hone your chart reading skills. Yeah, you can learn the strategy pretty quickly, but that doesn't mean you're going to have success yet, because you need that time at the screen learning to read this chart. Because the patterns themselves by themselves are never going to get you there. Just trust me on that one. They're never ever going to get you there. So anyway, I've beat that bush enough. Let's go in here and get on our chart. 7 o'clock came just as we're turning the top here. You can see it's 7:05 right there. That's tempting to take, and you might take that trade. There was actually a second entry here, but that was an engulfing bar, and I think it's too close to the EMA by the time you get there. You might have taken the original one up here, but I think you're better off to wait till that second entry comes in right there. And then I just think you're too close to the EMA. You can see, I mean, it shows you got 2 points there, but I mean, you might take that one. I didn't like it in real time because I was afraid it would bounce off the EMA, which it did temporarily, and then went lower and then turned back up again. I liked better going long here on the second entry. Technically, it broke lower and turned up, so the second entry created here, but this one swung lower again, broke lower and turned up and engulfed this bar. Now, you couldn't enter on the engulfing bar. You got to wait for this to close. That's the only way you could enter this one, because that doesn't, that would need to be fully red to want to enter it on the engulfing bar. And even then, it's only for advanced traders. So 99% of you wait for these engulfing bars to close. And what's an engulfing bar? It's a bar that completely engulfs the bar to the left of it. Notice it's got a lower high and a higher high than the bar to the left of it. So it engulfs that bar. And so you got to wait for that one to close. There's still plenty of room to get out, so I like that as a second entry. Most of the time after a break of a trend channel, you get 2 legs up to a new high before it reverses. And that's exactly what you got here. You didn't quite make another new high here, but you still got a new high with 2 legs up, and then it turns down. Now this bar here, the high on it's 1850, and the one next to it is 1875. So if those were matching, you could go short there if you like that. If you like that entry because you got a double top, but they're not. So this was your signal bar, the bullish bar. So there's no entry there. So if you ask me about that one, that's why. We turned back down here. We bounced at a possible trend line, and then we actually set another trend. We got a new trend within the trend. And that's why this stuff works at every level, because you get trends within the trends, ranges within the trends, trends within the ranges. It goes on and on. And so you get the same thing at every level, but there's only certain levels. You don't want to trade much smaller than a 2,000 tick chart because you'll get too many false triggers. And you don't want to trade anything much bigger than that because you won't get enough triggers and your bars will be bigger and your stops will be bigger and all that. I mean, people already freak out if the bar's not 8 ticks, so most of you couldn't trade a much bigger chart than this. Most of these signal bars today, I mean, that one's 17 ticks. This one's 25. This one's 22. They're still bigger than normal, but they're, compared to what we were getting, they're average. So they're not that big in the big scheme of the volatility that we've been used to lately. So, but the most important thing is where your stop goes, not how big it is. But if you look at every one of these signal bars, none of them take any heat. None of them hardly. This one might have taken a little heat, not much. This one might have taken a little heat. Most of them take very little heat. This one didn't take any. This one might have taken a little, but I think it did most of that before it broke higher. This one didn't take any heat. This one might have taken a little. So, most of these, if you're entering at the right places and reading the chart right, most of your entries are not going to take a whole lot of heat. So when I say that, when I'm saying take a lot of heat, it's not going to go against you very far. And if it does, you've got your stop in the right place where it's protected. Now, if you're not reading the chart right, yeah, you're going to get stopped out a lot of times because you're wrong. But if you're doing that, you're not ready to be traded. If that's happening consistently, you're not ready to trade live yet. Get back on the simulator and get to work, get to learning. It's just so hard for people to get that. I just don't. It's just difficult to comprehend why people can't comprehend. But I guess I do get it because I was there at one point. And you think you're going to be different from everybody else. You think I'm smarter than everybody else. I'm going to learn this quickly and I'm going to work harder than everybody else did. But that means nothing. I can tell you right now, if that's your attitude, you're just asking for a bruising or maybe even a breaking because they will crush you they'll crush you in an instant because it doesn't matter how smart you are, how much common sense you got. Price action does not move to common sense, and it will crush you. And so you have to learn price movements, which is what our rules kind of help you with, and then you just got to get skilled at it by doing it every day for a certain period of time. It's just like trying to play professional sports. If you want to be a professional baseball player, you can't just pick up a bat and go be a professional baseball player. Now, if you got to go practice with them every day and practice hitting those pitchers, those professional pitchers, sure, eventually you probably could learn to get a hit here and there. But right out of the gate, you probably can't even touch the ball. You'd be lucky if you could, unless you just have a natural knack for it. And reading this chart's no different. You have to go out and get practice and repetition every day for periods of time till you learn to do it. So anyway, I'm getting off track here, but this is a second entry. I marked it green because I didn't feel like it was back to the trend line. Maybe the trend line was a little higher, but I don't think so. I think this is correct. But notice what happens. You get a new high, it pulls back, you get a first entry. It breaks higher and you get a first entry, and then it turns down, it keeps going down, and then it reverses. Now this is an engulfing bar. So again, you got to wait for it to close. You can't enter this. Now this one you might could enter on the engulfing bar because look how it's mostly red. That's what you want to see. Again, most of you should ignore this and you only enter when it closes. And if you wait till this closes, it's too close to the high. Now if you entered it on the engulfing bar, there's plenty of room to scalp out. but you need to be a seasoned trader that's making money every day, or else just ignore this trade. That's why I marked it green. So hopefully you understand that right there. That's a advanced second entry, but it's still a second entry. But it's very advanced and not for everybody. So here we pull back just first entry. Here's a first entry. Pulls back again, another first entry. There's just no setups here that you can trade. Now this looks like a very strong trend, so if you got a good signal bar at the key entry point, maybe you enter, but there's not a decent signal bar the whole way up there. And here you get a bounce off, but this is your signal bar. Notice it fails. But notice what happens. You got a new high here, first entry, and you get a second entry there, which you might. The reason I don't mark this was because you can clearly see the downtrend. There's no break and attempt at a new low yet. So I would wait on this one, especially when you're getting that far away from the EMA for that long. Just follow the rules. Now, if it was right off the key entry point, maybe I'd still take it. But in this case, no. And so you notice you get your close outside of this downtrend channel, and it tries to make a new low and can't, and gives you a higher low. Then maybe it's okay to go long. The only reason I didn't mark this one was because it's still way away from the EMA. It didn't make a new low, so it still could fail one more time and push lower. So I only made that one green. Here you're just working sideways. There's not room to get out of any of those trades. No setup there. First entry, and now you're working sideways again. Now you do have a triple test here, way away from the EMA. Now you're into support here, so it's for that reason I made it green. But because what's probably happening is your momentum's waning here, and you just notice how each high is a little lower. It's just going to be a matter of time till we probably turn down and hit the EMA here. So you may take that trade. I think it's a little risky, but at the same time, the clues are there that we're probably going lower, and we do. We turn up here. Now notice you got two bar matching high, so you can use either one of those bars. So this bar qualifies. And notice you got a double top, and so you got a first entry, second entry, or you could just trade it as a failed breakout as well, really. But that's the way I see it. I think you're sideways here, and it's just a failed breakout. It's just you'd be better off to wait on a higher low, but you don't get one here, so maybe you take that trade. It's a little risky, so I marked it green, but it runs up, makes a new high, and then we turn down. Now notice here you got a new low, so there's a first entry, and then when you break below that inside bar, there's a second entry there, but that's an inside bar. It's completely engulfed by this bar to the left of it. So just ignore that one, don't enter there. Runs on down, same thing, you got another inside bar with a failed, it's not even a failed second entry, it's just a little higher low and a lower high. It's just an inside bar, it's just congestion, so don't enter there either. Runs down, you finally get a break. It's questionable if you have a close outside there. Maybe this is a little more like this. It's hard to say. It still works either way. So if it did have a close outside, it was questionable, but maybe it doesn't because it looks like this. And so you'd need a higher low or something there, and you do get one, so maybe you go long there. I marked it green. Turns out to be a nice trade, and then you're just kind of working sideways again. There's a lower high here. I'm not crazy about it. You see how it looks a little congested, and it breaks out and it fails and it pulls back. It ends up going lower, but sometimes you'll get stopped out before it goes lower. So I didn't draw it, but you can clearly see, there's some sideways stuff there. It breaks out the top and fails, and then it breaks out the bottom. And now you get a second entry coming back. Notice we do get a close outside of this and a new low, and it's also a second entry, but more than that, it does bounce off of this possible other trend line here. So that being that far away from the EMA, I like taking that second entry back to the trend line. And it actually comes back and confirms that secondary trend channel there. and gives you another nice signal bar. Now this one breaks lower first and turns up. I'd wait on this to close, I believe. It's just a higher low right off the key entry point. And then it gives you a reversal, failed second entry right off the key entry point, and another good signal bar. I like all three of those. We come back here. It doesn't break above that one, but you're not back to the key entry point either. This one's too bearish. So you got to wait on a higher low here. So that comes right here. So maybe you take that one. I marked it green because it's real close to the highs, but I think there's enough room. If we just go to that one, you're a tick short, but this is the one that's more important, the previous one, the previous high, and you got almost 2 points there. So I think you're okay to go long right there. I think it's a little risky. I marked it green, so it's not a perfect setup. And there's a second entry short right there. Notice that's a new long. First entry, second entry, but look what's happened. You would have got stopped out. That's why you don't try to pick tops in a big, strong uptrend. It ends up turning down. You don't get a lower high or anything. It bounces right off the key entry point. Now, again, we're still in this channel, and it's only a first entry, so I didn't mark it. You want to wait on a higher low, which comes here. I marked that one, and then you get another reversal. So it's almost a repeat pattern here. It's a little smaller pattern, but it's the same pattern. So I like going long above that one. The rest of these, you can't really. There's just a first entry there. Here you get two legs back to the EMA, but you also have some support across here. And I think you tested that once. It went away, came back twice, went up again, and comes back again. So 1, 2, 3 times we tested that. But it's a second entry. It's clearly two legs back to the EMA. There's strong support there. I like that one. And you can see prices take off again. And that's a big move up. You could go ahead and draw your trend channel again here. I think it starts right there. And it just works up here through here like so. And you finally get a convincing close outside a new high, and it works sideways before it sells on off. And I just don't see anything up here. I think this is just you're just got too much sideways stuff. And you can see that. This is a possible lower high, but that bar found resistance right at the midline, and you're really in an uptrend. So I just sit tight. I don't see anything there I like. It does end up going lower, but I don't think it was worth risking it. That's just a first entry on an inside bar. You're too far away from the EMA and all here, and then you actually get a break of this main trend line now. Oops. I don't know how I grabbed that, but I did. And you do make a higher low here, but this is too bearish. This is too bearish. Then you get a hidden second entry back, but I don't like that signal bar. And then it just comes back. To me, this is just a first entry. I think this is just sideways, so that's your first leg down there. Now, you could argue there's a hidden second entry there, and in that case, maybe you take that because that signal bar would qualify. But you can't count this as a first entry and this is a second entry like that because that's just sideways. There's no leg there. But that's a leg down, correction, leg down. So if you see the hidden second entry, maybe you take that one. It's the same thing here, but I don't like that signal bar. So maybe you take that one. It runs up to a new high, and it's just a first entry. I'd wait on a lower high here. Comes here. It's not a good setup. But if you just sit tight, in a few minutes you get a second entry right off the key entry point with a nice signal bar with plenty of room to get out. That's where you want to enter. And that one pretty much takes us into 230. So there it is. Mostly all uphill today. We turned up around the bottom. We put a bottom in about 315 or so, and it was all uphill. We topped out up here around lunchtime, kind of worked down to sideways, and close close to the high. It's not quite on it. So it was mostly a bullish day. And there it is. And again, there's patterns within the big, there's a main two-tiered pattern here. And I've gotten this question a lot. I don't know if people are all in the same place asking these questions to each other. And two or three of you say, well, I'll go ask and I'll go ask. But it seems like they all come in at one time, the same question. And people say, well, how do you know which pattern is going to win out? You don't. You have to just let the chart show you. Draw the pattern and wait and see which one wins out. A lot of times there's obvious clues ahead of time, but you don't know, like right here, we don't know if this pattern is going to play out or if the original trend line is going to play out. But you can see what happens when it hits that trend line, it hangs in there, and it wins out, so play it. Until then, you don't know, so just follow the rules. You're in this downtrend, you can't enter until you get a close and at least an attempt to a new low. And that solves that. So it's, people, the problem is most people are just constantly scanning for an entry. They're trying to make an entry everywhere. But you're only looking for entries at the right places when it gets back to the key entry points. So just wait on it to get there and see if it gives you the setup. And if it does, take it. If it doesn't, sit tight. And if there's something that's not 100% about it or that you like, or something that doesn't look right, just don't take it. Just wait. That's the difference between an average trader to below average trader to a good trader is usually just discipline. Discipline and patience. Look how long you had to sit tight here. You had a blue trade here at about, let's see what time this was, right around 7:40, early in the morning. And you didn't get another blue one until 9:50. So you had to wait 2 hours. Now there's a couple of green ones in there, but most of you shouldn't be taking those. So you had to wait 2 hours. Now I guarantee you, most of you can't wait that long, and you tried to manufacture a trade in here somewhere. It probably failed on you. Or at least if it didn't, hopefully you got lucky. Hopefully it was in one of these green locations. But most of you try to manufacture these entries that aren't there because you don't have the patience and the discipline to wait on a good setup and follow the rules. You got to learn to do that. That's the key. But look, once they started coming here, they were rapid fire for a couple of hours. And then you had to sit patient. There's only one more the rest of the day. And most of you couldn't wait from just before lunchtime till almost 2:30. You'd make something in here and try to enter it. And that's the difference between bad and average traders to really good traders. They're patient and they follow the rules and they wait on sure things. So, I was there one time, I get it. But if you want to be successful at this, you have to force yourself to follow the rules. Nothing more, nothing less to it. Follow the rules, be patient, and wait on the right setups. Anything else, you just have to sit on your hands. And if you learn to do that, you can instantly improve what you're doing. So, anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.